Let's get more on this with Tim Waterer. He is Business and Trade Analyst. Hi there, Tim. It's good to see you. Investors are concerned, as they usually are, about Trump's remarks, despite his role in leading the peace talks. Do you agree? Are you also concerned?
Nice to be with you. Yes, I think that is a concern moving forward, is that inconsistency you mentioned. So Trump very cavalier on social media and a little bit more positive regarding the negotiations regarding his tax. So difficult for traders to get a read on where things are at right now, and that resulted in that inconsistent performance across Asian equity markets today. So essentially here we are, where a deal is not exactly fait accompli at this point in time. That's why we're seeing a little bit of hesitancy across our markets at the moment.
And Tim, what are your expectations for the upcoming monthly employment report?
That's right. We have the all-important non-farm payrolls figures on Friday. So we expect to see a jobs creation figure last month of around 85,000. Now, that would be a little bit softer than the previous month's 115,000 that was created. So we could see a little bit of a weakening there, but I think ultimately the jobs figures will probably tell us that that's the part of the Fed's mandate which will be providing the least headaches for them, with inflation the main concern. So before we get to that Friday non-farm payrolls figure, of course, we also have the private ADP figures on Wednesday. So that might give us a little bit of an indication of how the figures on Friday may pan out regarding the other payrolls figures.
And Tim, given the recent volatility in the US dollar, where do you see it trading by the end of the month?
I think the US dollar will continue to closely follow the direction of the oil price. High oil, that raises interest rate expectations, and that suits the US dollar from a yield perspective. So if we got to the end of the month and we still didn't have a deal on the table or signed, and oil remains close to $100, I think the US dollar index, that'll stay around current levels of around 99, maybe up to 100. But if a deal did materialise, which dragged oil prices lower, I could see the US dollar set back to around about 97.5 to 98 range in terms of the dollar index. So the US dollar's fortunes, I think, very much tied to the direction of the oil price in the near future.
Tim, appreciate your outlook there. Thank you so much.